night we were doing a panel discussion at Borders Books. One guy was saying that we need to bring back tariffs and raise tariffs. And to me, I think that's absolutely insane. It's going down the same protectionist path that deepened the Great Depression worldwide. And so what are your thoughts on trade tariffs?
I really think that this new depression, as I call it, and the Great Depression came about for the same reason. In both cases, we went off the gold standard.
Yeah.
The gold standard broke down in 1914 originally because all the European countries went off the gold standard in order to finance World War I with paper money.
Yeah.
And that credit that they issued during World War I created a worldwide credit boom that we think back on now as the Roaring Twenties. The Roaring Twenties excessive credit creation created the boom, and then in 1930 the credit couldn't be repaid and the boom turned to bust, and countries responded by raising tariffs, which certainly didn't help matters. This time around, the Bretton Woods system broke down in 1971. The United States started issuing more and more debt to finance its budget deficit and then its trade deficit. This led to a worldwide boom for 2 decades, which we've all enjoyed. But in 2008, the credit couldn't be repaid. And now, just as in 1930, the world is left with enormous excess capacity across almost every industry. And there will be growing pressure to raise tariffs again.
Yeah, it's like we're reading out of the same script. I mean, you had Republican administrations back-to-back in the United States during the Roaring Twenties that were pushing for lower interest rates and cutting taxes, and then the market crashes and we fire the Republicans and we bring in the Democrats to raise taxes and redistribute our wealth all over, deepening the Great Depression.
But this time around is a bit more complicated.
Yeah.
In that,
right after World War I, though, there was a big convulsion worldwide. Here it was the Depression of 1921. We had a big deflationary episode. Germany had a hyperinflation. Milton Friedman, in his the Monetary History of the United States from the Civil War, basically, to 1960, 1867 to 1960, said that I loved the quote because he said, "For victor and vanquished alike," and I love the way that flows. But he said every country on earth paid the price of inflating their currency supplies, and people don't see that very often. The Great Depression overshadows that event so much that people can't see that there was, we got punished twice in the 1920s for credit expansion. The credit expansion for World War I, and then the credit that created the boom of the Roaring Twenties. So what were you going to say?
I was going to say, and this time the situation is complicated by globalization, because suddenly we have 3 billion plus people coming into the global workforce who are willing to work for $5 a day. So all the manufacturing jobs are migrating to the low-wage countries, exacerbating the high unemployment here. And it's very difficult to see what's going to change that. And these people who don't have jobs it's not going to take them very many more years before they realize that globalization is really not working out very well for them. And there will be another Ross Perot character who comes along and tells them that protectionism will be good for them, and they will vote for him. So there's very likely to be a protectionist backlash, maybe 2 or 3 election cycles out.
And that just slows down all international trade and sinks the entire world into a deeper depression.
That would be bad for America. It would be terrible for the rest of the world, and it would be catastrophic for countries like China. So we really need to find some other solution rather than waiting until that happens. Because as things are going now, there's no reason these people here are going to find jobs again, ever.
Right.
Unless we have some sort of development of new industries. And that's why in my book, The Corruption of Capitalism, I'm advocating a government-directed investment program on a massive scale in 21st century industries like solar energy, nanotechnology, biotech, and genetic engineering. It's going to be very difficult for the government to respond creatively and effectively, especially after in January this year, the Supreme Court ruled in a 5-4 decision that corporations can now give as much money as they want in election campaigns. I think this was disastrous.
It's dangerous, that's for sure. Yeah.
It's not as though the corporations didn't have enough say in what the politicians are doing already. So now, for instance, there's nothing to stop a large investment bank or a large oil company from giving $1 billion to 60 Senate campaigns and buying 60 senators, and therefore buying the government. So instead of being the United States of America, we should be renamed the United Corporations of America. Instead of having the senator from Texas, we would have the senator from Texaco.
That's very good. So when something's really overvalued, when it pops, it goes down in a crash, and then investors come in chasing yesterday's news once again, and they cause that thing, they think they're scooping up deals, and they cause that thing to bounce, and then it's still fundamentally overvalued. Our stock markets have gone back into a bubble, and then it rolls over and the crash continues. So read my article and you'll see that the markets are fundamentally overvalued, that there is absolutely no possibility that this is anything other than a dead cat bounce. If the markets go up